Hey everybody, welcome. See, we got Goose and Don, Craig, Sergio, Rob, Gary, Ed, Svenborn, IJ, Ed, Logan, Tiger. I think that's Darren, Laura, David. Good to see everybody. I'm starting to for those of you that have I guess icons, kind of associating a few of those. Ted, Dan, David, Skaggs. Good to see everybody. Welcome to the stream. Let's start a poll. I know FOMC is tomorrow, but the meeting actually starts today. So let's start a poll. Let's see what everybody thinks here. FOMC, pop or drop? Pop or drop? It's an anonymous poll as always. If you want to chat on the stream, just got to click the button, be a channel subscriber. And, coming up today, 5 p.m., I do the only request show I do every week, 5 p.m. Eastern. I go live Tuesday evenings, 30 minutes of awesome. I'll take requests. Well, lately it's been 60 minutes of awesome. We started out calling it 30 MA. That 30 moving average, 30 MA, and 30 minutes of awesome. So I'll do requests for at least an hour, and then I'll switch over to and ask me anything for channel members after about an hour, and go till we stop. And then coming up tomorrow at basically 1:55 p.m. Eastern, something like that, I'll go live for FOMC, FOMC live, and that'll be for channel members. So yeah, way back when, like 4 years ago, it was a 30-minute show, and now it's just kind of grown to where we go until we don't. Isn't that right, Kimberly? My favorite subscriber in the whole world, right there. All right, everybody. That's not what you're here for. This morning, we want to know how in the devil we make money, what the opportunities are. So welcome back to the show. If you haven't checked the price of gold lately, it's hovering right around $4,200 an ounce for a shiny golden metal. I got me a bag of pay dirt sitting here that maybe one of these days I should pan it out and see how much gold's in here. It's guaranteed to have gold, upwards of a gram, which is pretty darn good. Anyway, for those of you keeping score at home, that's over 55% gain on gold this year. 55%. Gold's been having a better year than most of my relatives. And gold doesn't even have a job. I mean, it's kind of like gold is the high school quarterback who just won the state championship, got a full ride scholarship to an Ivy League school, and is dating the head cheerleader. I mean, pretty good, right? It's the golden goose. It's been laying golden eggs for anybody that was smart enough to buy in. And everybody currently wants a piece. There's a lot of FOMO going on. And then there's oil. And I know a lot of you are in the oil industry. You've told me my predictions have been pretty bang on. It's kind of like uncanny. One of you even said, you pay people hundreds of thousands of dollars a year to travel the world and find out oil stuff. And this guy in Knoxville, Tennessee, that knows nothing about the oil industry gets priced closer than your people that travel the world. I don't know. Sometimes I get lucky, But this poor, sweet, unloved oil, while gold's been sipping champagne in the VIP lounge, oil's been stuck outside in the rain, trying to sell you a mixtape. It's been pretty bad, Oil's been pretty bad. It's trading at a measly $58 a barrel. And, I've kept saying that it has the potential to drop below 50. It's been the ugly duckling of the commodity world in 2024, 2023, maybe 2025, certainly. And I mean, it's been the kid that got picked last for dodgeball. It's been the guy who brings a knife to a gunfight. here in 2025. It's just not been performing. And here's the kicker. Peace talks currently happening between Russia and Ukraine, you'd think that's good news, right? Less geopolitical tension in the region, more stability. But no, the market, in all its glory and infinite wisdom, has decided that peace talks are bad for oil because a peace deal might mean that Russian oil can come flooding back into the market. So oil prices are front-running that and declining. It's kind of like the market is punishing oil for good behavior. It's kind of a classic tale of two assets. One, prom king, the other kid that gets his head flushed in the toilet with a swirly. I mean, the gap between them really is kind of wider and wider every day, it seems like. But what if I told you that the ugly duckling might be about to have its day in the sunshine here? Might be about to have a glorified moment. What if I told you that the kid who gets picked last for dodgeball is about to become the best dodgeball player on the field? And that's the story that Michael Hartnett of Bank of America, the chief investment strategy there at Bank of America, has been telling. It's a story that you potentially need to hear. Hartnett's theory is simple. His thesis behind it all, and, well, he's kind of thinking soon all commodity charts are going to be very similar to gold. Not just oil. Let that sink in for just a moment. Not just oil. We're talking about oil. We're talking about natural gas. We're talking about copper. We're talking about wheat, corn. I mean, lean cattle is already looking that way. But we got pork, orange juice, cocoa, and platinum, and palladium, and copper, and you name it. I mean, why? Because something changed in the world. The glitch in the matrix that changed everything. They changed something. We're not in Kansas anymore, Toto. For the past decade, we've been in a world of monetary excess. Central bankers were printing money like we weren't going to have more of it tomorrow. And this is a problem. In a world where bonds were king, that's the way it used to be. But now we're in a new kind of era, an era of fiscal excess. Governments are spending money like drunken sailors, and it's not just the United States. This is a worldwide problem. In this new world, commodities, you can't just print more commodities. Now, the solution to high prices of commodities is high prices for commodities, but when a limited supply is in the world of excess, prices go up. Think about it. We've got the end of globalization. It was a fun, 30, 40, 50-year experiment, but now we're seeing a lot of reshoring, which means onshoring, reshoring, and more demand for raw materials developed on your own soil. We've got a president who wants to run it hot. Run it hot. Do you even know what that even means? Well, for us that may not understand what that means, it means more government spending, more inflation. And we've got a Federal Reserve that's about to cut interest rates for the third time this year. It's like 80+% likely on poly markets that's going to happen tomorrow, which means more liquidity, more money. And it's highly anticipated that we see QE starting up tomorrow, an announcement for quantitative easing, or whatever they decide to call it this time, but more liquidity in the system, more money, more inflation, higher prices. It's a perfect storm for commodities. And the market is just starting to wake up to all of this. Check out Latin America. Their stock market is up 50% this year. Why? Because they are commodity rich, oil producing, gold producing, copper producing areas. They're canaries in the coal mine. They're singing a beautiful song of higher prices. So what's the investment opportunity? It's kind of simple. You buy the ugly duckling before it becomes a swan. You buy the asset that everybody loves to hate, the one that's been left for dead. You can buy oil. I know. Sounds a little crazy. I'm still expecting lower prices, but the best trades often contrarian ones. So start small and add as it proves it. Oil, right now, the most contrarian play on the entire planet. And it's not just oil. Hartnett, our Bank of America strategist, is also bullish on natural resources, metals, Main Street cyclicals. I mean, we're talking like home builders, retail, transportation. He's also a fan of mid-cap stocks, which are looking relatively cheap right now compared to some of these big tech AI giants. And what about AI? Well, Hartnett's not leaving that for dead. Hartnett has a great take on this too. He says, be long the AI adopters over the AI spenders. In other words, check out your investment. Are they adopting AI to become better at what they do? Or are they spending on AI to try to make money off of it in the future? You want to be in the AI adopter category, not in the AI spender, data center spender category. At least not the ones that have direct exposure to it not paying the bills. In other words, go after the things that are using AI to become more efficient at what they already do, not the ones that are spending billions of dollars for infrastructure that may never pay the bills. And I'm not saying that you should go out all out, bet the farm on oil. Certainly not. This is a start paying attention type of thing, especially if we get that dip below 50. That might be the opportunity right there. Because the old rules, the way we've done things for most of my investing life, probably not the way it's going to work for the rest of my investing life, especially in the world of excess money. The golden goose had its day, but now it's kind of time for the ugly duckling to maybe turn into the swan. So that was what I had today, breaking down Hartnett's kind of outlook for commodities in 2026. And jumping back over here, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This show is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Nobody's going to look out for you better than you, but if you want to pay somebody to look out for you, there's people you can hire. Make sure you trust them. But nobody cares about your money more than you, right? Nobody's going to do better for your money than you if you take a vested interest in it. And if you don't care about your money, well, you go find somebody else to hang out with. It's kind of the way this works. It's kind of the way this all works. Welcome to the show, everybody. Let's jump in, figure out what ES has been doing overnight. How's it been cooking? Hey, good looking. What you got cooking? I don't know. This is starting to make me a little nervous, quite honestly. Check back in on the chat here. See what we got. Yeah. Thank you, Sabina. And so this right here, what I see, trying to reduce the candle so I can make it very clear and nobody gets too confused here. This right here is the first drop. Not very clear. All right. This retrace right here looks very A, B, C-ish. Why do I put it there? Why do I put the A, B here? This move, and then 1, 2, 3, 4 overlaps, and 5 for the C. That fits. If it fits, it ships. It's probably the right thing. Occam's razor, the simplest explanation, tends to be the right one. That's potentially 1, 2. 0 point, origin point, 1, 2. See how vicious that was, that drop right there? potentially a 3. This overnight action, potentially a 4. 1, 2, 3, 4, 5. That's what I'm looking at right now. Now, the thing that makes me a little bit uneasy about this if that's what we're going to do, corrections don't take place in 5-wave moves. Trying to look for, can't remember which one it, there it is. Corrections don't take place in 5-wave moves. So what does that leave us with? It either leaves us with, I'll just draw it. Leaves us with this being a wave 1. We do a correction for wave 2. Or this is an A, and we do a correction for a B. Either way you cut this, down is the next potential right there. Thank you, Sonia. Appreciate you. Yeah, we're going to hammer drill again. I thought we were done with that yesterday. Cool. Anyway. And they're working right under me again. I thought they were done on that. Whatever. So if you hear a sound, they're working on the office right underneath me, trying to rebuild it for a new tenant. And I apologize. So right there we have it. It doesn't matter if it's an A, B, or a 1, 2. The problem is the next move would be down after we do a correction. Now, it doesn't have to. We can always do something different. If we don't make a lower low here, this could possibly be an ABC. This is just a weird 1, 2, and we go higher. If we stay above this bottom potential right there, today into tomorrow, the downside's probably done. This could be an ABC, not a 1, 2, 3. It just has that enthusiasm we had on the downside. Looks a lot like a 3. Could be a C. It's possible. But right there, that 4 has me concerned. The way this came up, it didn't overlap. If we complete a 5 down, and that leaves the potential to rally back up, find resistance back at the wave 4. It's very consistent with a B or a 2. Doesn't matter which one. And then we get the continuation down. At that point, here's the difference. A C wave, C wave. If this is C, we typically stop here. If it's a 3, we'll typically go a little further. And then we'll get a bounce and a final flush. I would prefer this one. If we see like, now this ties back into somebody was asking me right before I went live, what do I expect? I said, I always got to ask your opinion because you tend to be right more than wrong on these FOMC meetings. What are you expecting? And I typed out, if we keep hovering right in this area, right here, I expect that we may need a bigger drop, maybe 200 points at least on FOMC, or the days thereafter before we can break out and go higher. This is not guaranteed. This is just my kind of expectation. So if we chop around in here, maybe even that's, that was the C and we go higher. If we end up right over here, 2 p.m. tomorrow, we could see a 200-point correction on SPX. And in case you're wondering what the double ES is, it's just the futures for S&P 500. They trade 23 hours a day, 6 days a week. So there's not really gaps in the candles and the price action, and that's why I use it. It has a more complete price action than the cash index. Now, if today we get about a 100-point pullback, look at this. And we've already started down this rabbit hole here. That was about 68.70. Down here. Right in the middle, 67.77. And we could see this bounce around a little bit. Maybe. Or just go ahead and flush it out now. If we do like 100 points down today, tomorrow might be a pop. So be careful out there. Like, we could see a little bit of chaos going in tomorrow. VIX here, turn the bottom. It's telling a story. We're worrying about tomorrow a little bit here. Bottomed out down here. Gap up over the weekend. See what happens. Remember, VIX doesn't tend to trend. We get spikes and then we come back down to zero. Kind of did a double spike here. And we don't usually, we've entered a realm of more chaos, you might say. From about July on, the frequency of spikes has been more than what we've seen prior to that. See, it seems to be kind of a heartbeat. We get a regular kind of freak out. Then we go through a period of higher frequency freakouts, and then we kind of go back to normal. And no freakouts are exactly the same. The reasons are always a little bit different, but we're in a period of a little bit more frequent spikes since July. I would kind of expect we go through a period of reduced volatility, maybe dip back all the way down into 10, 11, maybe even single digit area. We were there last year I guess that was July last year. July last year. And when we kind of freaked out in the market, and we've kind of stayed elevated since then. So, this could continue. I mean, roll back and look at history. When we had the same person calling shots before, we did have periods of increased volatility. Then we had the biggest volatility event ever. And we've still been bleeding this back off. So we haven't really returned back to that 9 level that we were at all the way back here in 2017. We just haven't ever taken it back down to a calm in the market. Okay, I didn't pull up the... There we go. This is the put call ratio. Look at where we are down here. This is just on SPY. Put call ratio for SPY. Typically means we're going to see some increased volatility. We're down at a low level. So, reading the tea leaves, we could see some problems. The call ratio, NASDAQ. There's different ones. I mean, like, I'm not just pulling up the one to watch. PCQQ is down. PCSP is down. And we could see some increased chaos cooking out of this. And we took it up here pretty high. Then we brought it down here pretty low. So the fear is sucked out of the market, is what this is telling us. Fear is sucked out of the market pretty quickly. So players are betting, placing their bets on a bigger pop. NASDAQ. Take a look over here. Again, that looks like an ABC down. There's potentially a B wave up. Went a little higher than I would have liked. That 618 would have been a great place to stop, but no, we pushed it on up to a 76. That's why I keep it on here. We're still in the uprights. Went to the top of the uprights. I'll drop back down here. Still looks possible. And when you zoom out on S&P, we have the same thing cooking. Like if this turns a little more sour grapes, we've got that potential. If we break out, great. But there is that potential sitting on the chart right now. Kind of been watching this one. If for some reason we do some kind of crazy pop today, 2600 is the target. But the way this came up here, it makes me kind of think that possibly we're going to see another correction. The way this stalled out, you can see this pop back down here. Now, another interesting thing I pointed out to Jack Carter yesterday. Let's go to, let me clean up the chart here. Let's go to a clean view for a moment. Everybody see this price action right here? This consolidation below this breakout. Deja vu. I'm having a little bit of deja vu. Seen this before. Very similar. Look right here. This dip didn't hit the roadmap line. Came back up, consolidating. December. Guess what? That popped on up after a dip. Now, somebody talking about a dip on FOMC. New highs into the new year. But then that opened up a bigger correction. There's potential that we are repeating this topping pattern here in 2025. That thing looks almost bang on the same. It's crazy. Crazy to me. Watch this. We grab that sucker, jump up to current prices. have to adjust it just a little bit so it looks very similar. It's not exactly the same, but we would be right here. Pop that back up. Yeah, that kind of looks the same. A little bit less chaotic, but right in the same time frame. So, yeah. Be careful on that one. Deja vu. Market doesn't always do the same thing. We can, you know, the story could be different this time. Always is, right? The story's always different. The results, maybe not. We'll see. Anyway, jumping back over. Let's check out the other things we watch. Oil, like I said, we still have some downside, but for 2026, if we can get this final flush out here, this may be the big winner in 2026. Ways to play. USO, baby. You could try to pick individual winners, but this has been just kind of a laggard. Now, if we're going to actually shoot some turbo juice on this thing, you could play UCO. This has been pretty beat down. When oil takes a rip, this thing follows suit in a big way. So that's an ultra oil play. Sure, you can play individual oil stocks or whatever, but USO, probably the most general way to play. And then if you want to play leveraged, UCO. Gold. Can it keep being a performer in 2026? I don't know. We definitely could use a correction here. And the way this stalled out, it looks like we may take that third leg down. A, B, and the C is hanging out down here. We might finish this up. If we do, we're just looking for anything lower than that low we made back there in October. We can take that down here, get down in this vicinity. That finishes up the potential correction on gold, and we can go on to 5,000 plus, 5K plus. Bitcoin, so far so good. Holding this pattern nicely. It freaked some people out yesterday. Bitcoin's always good at doing that. We want to see it get through that level and on up to this level. And then that's the major test. This could be the top. I don't know. That'll be a very key, important level up there. Depends on how we get there, what we do after we hit that. If we just go cruising on through, sigh of relief. If we stop there and turn down violently, well, no bueno. Probably crypto winner. I want to see it get on through. That would be good for higher prices, maybe a new all-time high. But if we reject, crypto winner is a very distinct possibility. CZ out, I guess, last night or overnight or whatever, yesterday. He's the former head of Binance. His lady friend, life partner, is now the co-CEO now that he's gotten a pardon, and she just got appointed like last week. And CZ was out saying that he thinks the 4-year cycle is finito on crypto. We'll see. Time will tell. Maybe, maybe not. This right here still needs to break out, get on up through the roadmap line to confirm we're going higher. If we reject, Still indication of crypto winter. So nothing's cleared up on. It's just another day that things are going okay, but no indication good or bad. Still on the path for going immediately higher, but longer term, I don't know. NKD pushing back higher. This breaks back above that high we had a few days ago. Very good. We get the candle close above that 618 there. This looks good for going on higher. Targets up here, 53, 54,000. This is an indication of global liquidity on NKD. Strike that, reverse it. Dollar index, man, talk about maximum frustration. Sitting there right above the breakdown level, right below the breakout level, and the resistance of the roadmap line, and we're just kind of sitting and cooking. Short dollar has been the big trade of the year, so if we break up back above 102, this is probably going to stop out a bunch of people short dollar and go ripping, probably back to an all-time high. If we break down below 98.5, probably going to take a trip back down lower low than these lows we've had so far this year. This lowest low right here in September, we might need to make one more trip down there. So we've got a double bottom in place with that lower low, but it just doesn't feel finished. This price action right here has not been bullish, at least not been constructively, impulsively bullish, Elliott wave wise, and that kind of invites one more trip down here to clean it up. Maybe this year, maybe in the early next year. We'll see. I wouldn't be surprised. Apple dumpling. 292 target still in play. But if we break down below the uptrend lows, roadmap line and something deeper may take hold. Amazon still not being bullish and still continuing to fill out this head and shoulders pattern, which can open up the door for a bigger downside unless, caveat, unless everybody starts talking about the head and shoulders pattern on Amazon, in which case it will usually reject that and go on higher. So start tweeting about it or posting about it and get everybody on the train that it's got a head and shoulders, and we'll probably do the opposite. Google still has that 337 target. You know, we may come back here, retest the gap up before we can push on up there. If that 304 level doesn't hold, we could come on back deeper. And the roadmap line coming up pretty viciously here, so these two things may meet in the middle over here after some consolidation out in Q1, Q2, 2026. So Google may be on the struggle bus. That was a big move up off these lows. You know, look at that. That was like 130% move up. Probably going to take a rest for a little bit. Meta, I really want to see a retest of this zone right here. We can retest that and hold it. Very bullish. I'll probably buy a good chunk of some leverage ticker like METU. Could you pick it up now? Sure. I'm waiting. It's a patience and discipline thing, like a patience to wait for my setup. I set up for this reversal. I saw it hit here. Didn't flinch. Saw it hit here. Didn't flinch. We hit here. It's time to take some action. But we need it to hold too. If it hits here and then just keeps going, game over. Failed. Microsoft still hasn't been able to break above. It's got downtrend highs. Be careful. This can invite the door to something deeper. Similar to Meta, can do a big 618 retrace of that whole big move up. Nvidia, so far so good, but this kind of looks like we're going to break back down. We haven't been able to get up to, we haven't even gotten up in the vicinity of that 618 at 195. It just invites a bigger, deeper retrace of the breakout level from last year. These highs we made back here late in the year last year, back in November, December, we may need to go retest those again. See, we haven't really done that. Like since we broke out back here in June in the summer, we made no real attempt to backtest that breakout. So this may be the time. Right down in here. Tesla. Dear Tesla. Backtested the 618. This is a positive sign. If we can break back above that high, it is game on like Donkey Kong. Probably coming up in here at 500. The main target 550. Possibly even up to 600. If we can break out. This thing has a beautiful pattern setting up right here. Now, that doesn't mean it won't pop up here and retrace and then go like that. You know, volatility is the name of the game in Tesla. This thing loves volatility. So, I want to see that break on out. Netflix. I'd love to see that move be it right here. Like this looks done now. Can it go lower? Sure. Can do anything it wants to do. I said that the split would be detrimental to the share price. Say, oh, it has nothing to do with the share price. It's all the bid on Warner Brothers, blah, 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 blah. You can put your reason to it, whatever you want. The split has historically been bearish for anything that split in the last couple of years. Anything that does a regular split where the price goes from a high number down to a lower number, psychologically, that has been very bearish. And it causes prices to go down. You can say, you can add on whatever you want to, the Warner Brothers Discovery deal, blah, 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 blah. I don't care. I don't really care the reasons. This hit the levels that I was watching. Pretty much smack dab on right there. Had this arrow on there for a long time. So looking for this to be the floor and we go higher. But if it's not the floor, if we get into this zone, opens up the door for a bigger, deeper retrace. All right. I go pull stuff moving $2 or more up in the pre-market, put it on the gainers list. Stuff moving down $2 or more, put it on the decliners list. Neither list is very big today. It's not a lot happening so far. There wasn't a lot happening. That's a acquisition company. This is a investment manager. That's a real estate investment trust, which, what the heck did they do? That they went from 15 to 20. But you look at it, they're just in the chop. AVAV. Potential for this to have bottomed. We break back above 350. Upside 450. Sezzle. That was a 618 retrace. This is bullish. That move. That move. Hold. Break back above the daily roadmap line. Opens up the door for potentially that move. That'd be pretty crazy. You are the only one. It's kind of nasty. It set up the potential to push on up to 40, but the way this rejected, it also could be, it could fail back down, make a lower low. I'll probably just skip pass. Another acquisition company. JNUG probably coming back down. If gold continues the trip down, that'll go down. Xcure. It's biotech. Just don't mess with biotech. AGQ pretty much did everything I dreamed it would do this year. 172 is the next upside if you want to keep believing in this. We can easily do a pullback, so be careful. But that pretty much did, like I talked about it down here at 30s. 105 was pretty much the target. Heck, we talked about it back here last summer. 18 months ago, pretty much. 105 was the target. We got it. Like, boom. I don't know. Like that was my big play for 2025. It worked. Congratulations if you traded it. DHR not providing any clarity here. CNM, core and main, infrastructure stuff, but not looking super strong. Didn't break out. Look at that beautiful pattern. Retraced, came up, hit the target 1448, and went into another consolidation. NVS, choppy as it can be. Hadn't hit the roadmap line, and since back here, probably due for another one of those. VOR. Reverse split. Dumpster fire, baby. Dumpster fire. Back down in a blaze of glory. Flaming, baby. Start putting those on the dumpster fires. CVS. So this was the original chart I used for the market roadmap line class in the members area. Funny enough. And we did it. We hit the upside target. Watch out for another consolidation here. Nuggets probably needs a consolidation. Stuff that was declining. Good grief. Look at the dumpster fire. Holy moly. TWG. Another one. Dumpster fires galore. A-Lab, if we can break out back above 201, 287 upside. Home Depot hunting for a bottom. That's hadn't been able to do anything bullish. Big consolidation. 3-wave up. 1, 2, 3. Probably needs to make a lower low. Probably needs to make a trip down in here. Toll Brothers. This can break down, make another leg. We've got first move down. Got the retrace. Next move down. Not surprise me to be down in here. Ollie's. This is my dad's favorite place to shop, I'm pretty sure. Can't hardly keep him out of that place every time he drives by. I can break on, like that's retesting the breakout here. I can shoot it on up to 167. It's a bait on that thing. 4-2. Ferguson Supply. Coming back down for the roadmap line. Carvana. Might be played out. Be careful. Can break on out, but danger, danger. SanDisk probably coming on down. Baidu probably. Ooh, Oh, looky. If we can get above that 133 area, it's probably good for a pop to 155. I might play that with a debit spread. I might jump out to like March. Play that with like a 140, 160 maybe. Not saying it's affordable, not saying it's doable, just me eyeballing and guessing what I might do. LEU. Well, we can get back about 349, 500. SLM. Dropping out. Reddit at the resistance. If we can push on through, 300 becomes the real target up here. That doesn't look too shabby right there. Baba. So unlike Baidu, Baba is still hunting the roadmap line, it looks like. VRT and China's surplus. China's trade surplus was $1 trillion. I don't know if that's 1 trillion won or 1 trillion whatever, but US dollars. But I saw the quote last night, $1 trillion for the first time ever. VRT still looks like it has downside. Coinbase. Potential to be bottomed out. We need this to get back through the roadmap line, back through the 618, and kick off the upside potential. There's just a move up. There's no retrace here, so it's not a reversal yet. Kind of like Meta, I'm just waiting. Like we didn't actually hit the 618, so I'm just sitting here waiting. Patience to wait for the setups to fully cook. WDC, potential to come back down. Golly. That looks pretty bad. May need a full hit of 8 before we can bounce. Mew. We're getting lofty here. 267 is possible. I mean, 415 is possible, but probably going to do a retrace. GPCR. I'm not touching that. Auto parts back to the roadmap line. If we can bounce. Opportunity. Strategy. Potential. So if we can turn higher, I am long. This was a very bullish candle pattern here. I am long, looking for a pop, but if this fails, probably coming down here. Looking for a pop back up in the 250 area. Then we may retrace, hold a higher low, and then set up a bigger pop. But if Bitcoin just turns and burns, this could just go ripping. So I don't know. Just a guy on the internet with a show. Lennar. I don't have much exposure to MSTR. I have some MSTX and one of the retirement accounts. That's about it. This breaks down. We're probably going on down. We came up shy of that target back here. Hood. I've been mentioning that if we don't go ahead and break out here, this can retrace deeper, but it did set up the upside potential. 75% likely to come up to 163. 75%. At least 25% that we're coming on down here. Flip a coin. Which way do we want to play? NBIS. If we get above that 115 area, probably 150 on the upside. TGL. Reverse splits, dumpster fires. I'm not playing with this. Put this down here. Put this down here. Probably going down in a blaze of glory. RBRK rubric. Kicked off the entry. 111 is the target. Boom shakalaka. It didn't actually trigger my bot. Let's look at stuff that was set up with my signature pattern. So the pattern. If you haven't watched, you don't know what I'm talking about right here, go to the channel homepage. Click the button underneath me when we're done here. Go watch the video I've pinned to the channel homepage on how this works. Maybe kind of boring, but this is my signature technical pattern. Like a break through that roadmap line. You're like, well, how do I get the roadmap line? Guess what? In the video, I give you the code. And if you're just like, code, no way, dude. I'm not a coder. Pay $5, links in the description. You can get it, easy button. You just click it and put it on your chart. But I give you the code so you can, use this all you want on any platform you want. It's pretty darn simple. It's just a couple of EMAs. Now, price breaks up through it. Great. Price comes back down, tests it. Now we're talking. This is a trend. Pullback. And now we got continuation. When we get the indication that we broke above the 618, here's the high, here's the low. The low has to hit the roadmap line. Can go below it, but it has to hit it. That's the minimum requirement. It has to hit it. And we bounce. Get a close above the 618. That's what we got right here. The target right here. The 1.1448 fib line, which is not a standard fib line. That is 90%, 0.9 times the 1.272, which is 70% likely. So this one's 75% likely. Right here, this one's 70% likely. By going 10% below, you gain 5% likelihood to win. I like that personally. So that's why I went with that. And this right here, historically, does not have 30 trades. 30 is a statistical population. So we need greater than 30 to look at these numbers. These numbers don't mean jack diddly with just 7. You can flip a coin 7 times and get heads every time. 30, that starts being a statistical population. There may be an anomaly in the numbers, and this may mean something. Now, an example one that kind of works more often than not, like McDonald's, right? McDonald's, when McDonald's sits up, we have 43 trades, 81% of the time it goes on, and the profit factor running richer than the standard. The standard here would be 75 and 1.2. So when these numbers, when this is greater than 30, these numbers are greater than the standard. You've got one that tends to trend, pull back, and continue with a higher frequency than the standard. That's why I look at the statistics down here every day. CMPS, statistics don't mean anything. Very classic. Bounce here, move up, retrace, entry, 746. Now, low price stuff, under 20. It's less than 20. Kind of like maybe work, maybe don't work. I've seen a trend where things under 20 don't always follow the patterns, but that doesn't negate any one of them from working. We talked about this one before. Then it went on to make a lower low. Now we're looking again, and it didn't quite close above and trigger the trading view, which is more stringent than the Python tool that I use to build the list. So I kind of probably skipped this one for now. Doesn't have great statistics either. IPSC. Now, this is one of those anomalies where it met the pattern qualifications, but all the price action is under the roadmap line, and it takes a move up through the roadmap line to get to the target, and it is low price crap. I'd probably skip this. LAND. I searched for the 4,000. I searched through about 4,000 tickers every day that move 0.25 or more per day. So, excuse me. So all the things on the list tend to historically move more than a quarter point a day, which gives you, opportunity to make money. If things don't move a quarter point a day, it's not very active. So that's my filter. This one, I would look at the bigger trend. It picked up this little baby trend right here. And while that could play out to a small pop, since it's low price stuff, I just probably wouldn't touch it. I'm just looking for that 1330 right there. But I'd wait for the bigger bounce. In tap, maybe like, why are you even talking about these if they're not great setups? It's just a lesson. Like, some people don't know good ones from bad ones. You can let me know in the chat if you enjoy this kind of conversation. But there's the high, 126. Here's the low right down here at 100. There's the entry, 130, 27, 62, 64. Now, 3 trades to make this 30. Plus 3 equals 30. Even if they're all winners, this is still going to be below the historical average. And this is still going to be below the historical average. This ticker kind of sucks. It tends to lose money on this pattern. Skip it. Right? This is the patience and discipline thing. Patience to wait for the setups, discipline to only take the best of the best setups. I'm like a retired trader and wait for the best of the best stuff. Here's the high, here's the low, there's the entry, 376 target. This one, not bad. Out of all the things so far, this one needs 8 more trades, right? But 8 more trades probably isn't going to like blow this out of the water. And this is looking really nice. So this one tends to trend, pull back, continue, pull back, continue, pull back, continue. Not a bad shake. Out of everything we found so far, this is probably the best one so far. You may be like, well, I can't afford any options on this. Buy a share. That's $300. Your stop is $1 below the low, down here around 265. Your target is up here, 376. Your entry right here at 327. 1 share. How long can we expect? 45 candles on average. Remember, candles are not days. Candles are trading days. Standard deviation on that is 35. 3 standard deviations get you to the 99 percentile. And that would be 150 candles, which is 7 months on the daily chart. This same pattern works the same on all time frames. But if we go from here, 7 months, 150 candles, right there, 220 days. See, we're December, July, 7 months. Boom. That's how it works. So this could take this thing screwing around in here 7 months till we get there, but it could go fast. It could happen tomorrow. 45 is the average, but the 99th percentile is 7 months. So if you're trying to buy options and you don't want to run out of time, but even if you buy 7 months, 1% of the time you'll still run out of time. It's the way long tail works in statistics. Last but not least, TECL, tickle. Here's the high, here's the low, there's the entry, 165 target. Another one that looks decent. Right up there will be the target. And that's a 3x leverage. Leverage stuff doesn't always follow the pattern, so be careful. Extra caution is advised. I would not go very big. And that's the list. So look at the bias for the day. As I talked about earlier, heading into FOMC. If we just go popping up here, we're up here tomorrow. Watch out for a drop. I'd probably give that, I don't know, it's probably something like 65% versus 35. We just go higher. Not extremely committed on this. It could be 55, 45. A little better on a coin flip that we drop, but not putting big money on it. Not buying protection with both hands. But I don't like traditionally FOMC coming up tomorrow. FOMC. The market's just gonna do that. That's more than likely what we do. Stay in this range. Don't do jag diddly. If we drop 100 points, probably gonna pop. We pop up here, probably gonna drop here. As I've said many times, bit of a coin flip. It's kind of like the 55 drop, 45 pop. That's what we got. So I'll be back at 5 p.m. for 30 minutes of awesome. I'll be live with Jack Carter at 11:30. Links in the description for that one. 5, it'll be right here on this channel. Just make sure you're subscribed and hit the bell with all the little doodads, all notifications if you want to get notified. And then maybe also set your calendar reminder in your phone, because YouTube has this funny habit. If you don't click on alert a couple times, then they decide you don't like it and they won't tell you anymore. So be careful out there. Nobody's watching out for your account more than you are. I'll be hanging out in Discord as much as I can today. On with Jack at 11:30, and I'll see you at 5. Come hang out, make your requests.